you have to understand Bitcoin is volatile. It's a volatile asset. Don't go 100x leverage. You'll get liquidated. It is volatile. It has been volatile. But there's so much good news, good narratives. Of course, when bad micro news comes out, Bitcoin will get hit as well. But if you're in spot and if you're in Bitcoin, I think you're going to have some very good times very soon.
Love to hear it. Willem, hang tight because I'm going to bring you back in just a sec. We're going to talk about our next story momentarily about the big, beautiful bill. So I can't wait to get your thoughts on that. So hang tight with me, buddy. Because Washington, D.C., well, they're racing the clock again. And this time, Bitcoin might get a cameo in Trump's one big, beautiful bill. While Senate Republicans hustle to push the president's sweeping budget reconciliation bill across the finish line, pro-crypto senators like Cynthia Lummis are scrambling to sneak in one more little thing, a tax exemption for Bitcoin. The amendment could include three big-ticket items here. First, a de minimis capital gains exemption for small crypto transactions, clear taxation rules for staking and mining rewards, and a mark-to-market provision for companies holding Bitcoin. And if you're thinking that it sounds like that would make crypto way easier to use in the United States, you're absolutely correct. It would. Because under current law, even using $10 of Bitcoin to buy a burrito, for instance, creates a taxable event. This change would eliminate that headache, allowing crypto to function more like an actual currency. But here, my friends, is the twist. It all hinges on what gets jammed into the bill before the Senate's final vote. And as of Monday afternoon, the amendment was still in limbo. Lummis said she's working on an OBBB amendment to ensure Americans can use digital assets without fear of tax violations. Though the threshold has changed 3 times, from $600 to $200 to somewhere around $300. The clarification on staking taxes? Probably safer. The idea is to tax staking and mining rewards only when they're sold and not when they're earned. Now that resolves a years-long gray area in crypto tax law. And for companies like Strategy or Tesla, the mark-to-market rule would let them report Bitcoin gains even before they sell, which makes those quarterly earnings calls way more fun. Ultimately, the final decision comes to Lummis, Finance Chair Mike Crapo, and Senate Majority Leader John Toon. Crypto insiders are calling it a Hail Mary, and if it gets added to the bill today, it's in. If not, it dies on the floor. One source put it bluntly, saying it's either happening today or it's not happening at all. So while the U.S. government debates whether you should be taxed for using Bitcoin to tip your barista, the rest of the world just keeps on stacking. We're bringing Willem back. Willem, there's talk about a new rule that would let people use Bitcoin for small purchases without getting taxed. How big of a deal would that be for real-world Bitcoin use cases?
I mean, absolutely massive. People absolutely want to do this, and it's way too late already. This should have been agreed upon years ago. People want to use Bitcoin as the money. I want to buy my burger in Bitcoin, and so this has to go through. In essence, like if so many people want to do things for genuine good reasons, then we should allow to do that. Right now, the tax environment is just so messy, and so they're always running behind after technology, of course. But now Bitcoin has been around. The technology is there to pay for your burger to do these things in Bitcoin. So time to approve it.
Yeah, Willem, you have, there's people out there like, always think of Jack Dorsey, for instance, that's come out and said that it's incredibly important for Bitcoin to stay relevant and kind of fulfill its own promises to be used as an actual currency that people can readily buy and sell goods for. Do you believe that as well, or can Bitcoin still remain relevant as mainly being used as a store of value?
It will absolutely remain relevant either way. Like Bitcoin is bigger than anything. Like it's across the globe. There's only a few countries that need to start approving it as money, as we've seen El Salvador do it, and that's where a lot of activity will start happening. And so eventually every country in the world will have to follow. That's the game theory, and that is playing out. And so it will enable and put any country that approves it on the forefront of new technology development. And I absolutely believe Bitcoin will be used as money, not as a store of value. It takes time. Botanix is the next step in that journey towards Bitcoin as the money. But either way, Bitcoin will become money, not just a store of value. Then the second part, no capital gains tax on staking, is very applicable to us because you can stake with your Bitcoin and get actual Bitcoin yield back. So this is a whole new paradigm opening up. And then yeah, any of the DeFi on-chain activities, you kind of don't want to pay a taxable event every time you do something on-chain, in essence. And of course, for companies that would want to use Botanix, it has to be very feasible for them to do it as well. Yeah.
And some people are saying that this type of legislation is about pushing Bitcoin adoption, and others are saying it's about kind of scoring political points. Where do you land on that?
Well, it's probably a bit of both. But as the most important leading country on technology, you don't want to block these things. This is the next frontier that's been building. This is the next frontier of finance, the next frontier of financial systems, of new money. I think it will help a lot of the people in the US. Now, of course, there's 8 billion people around the world, and we've always seen, for example, like stablecoins have much more product market fit in emerging markets. Like everyone who doesn't have a bank account, they can use these wallets, they can use the on-chain economy. And so adoption is already massively happening. And so users are all across the world. Adoption or approval of this bill will help us for the US users, but we see a lot of users all across the globe.
Amazing. Love to hear it. Willem, stay tuned. We're going to bring right back and talk about Michael Saylor in a second because he's back in the news, and this time he has seen the future. And my friends, it is not credit, it's not cash, it's not even gold. It's Bitcoin fueled public companies flipping traditional capital markets on their heads. Speaking at BTC Prague, the strategy co-founder outlined a new model of business growth. Issue equity, issue debt, convert it all into Bitcoin, and watch your market cap explode. Saylor said a public company can do in 1 month what it would take an individual 20 years to accomplish. Why? Well, because corporations have the power to convert financial instruments into digital scarcity at scale. Corporate finance is being rebuilt in Bitcoin's image, and Saylor's already written the playbook. We're bringing Willem back. Willem, Saylor says companies will start measuring success by how much Bitcoin they own. Do you think he's right, or is that like a little too maxi?
No, that's absolutely right. I mean, I think a lot of Bitcoiners calculate their net worth in how much Bitcoin they have. That's the only thing that matters, especially if you believe this is the next reserve currency. And so the similar thought process happens for companies. How much Bitcoin does a company have? That is the game changer. Maybe 20 years from now, when Bitcoin is actually money, of course, companies should have productive value. But today, with this opportunity, he's fully right. That is the massive game changer.